Okay, let's see if the audio works. It looks like I've got the little bars here, so everything should be working, I believe. And today is Wednesday, the 11th of May, 2011. So let's go ahead and take a look at this market here. We've got the S&P 500 up first, and we're looking at a daily chart, of course. The market has made what's looking like the possibility of a lower high here in the near term. We got that test of the prior support that's been the basis of this inverted head and shoulders pattern. That is the neckline. If we break below there, then I think things could get a little bit weaker. But right now, we're really not getting much clarity with this market on a day-to-day basis. It's been kind of back and forth. Yesterday, on Monday, I pointed out in a video about the possibility of another one of these types of gaps up that recaptures the 5-day moving average, and that's exactly what we had yesterday. And from there, the market ran a little bit, held on to those gains, and then made a higher high. So things were looking good as far as we want them to be, because this 135.50 little level of resistance that we've seen form recently was taken out. Well, obviously today we had a gap in the market. We had a gap down, and then we did take out some support in here as well at the 135.50 level, and sold off a little bit deeper than I would have hoped that we would. But we are still, of course, above that level from the daily chart, which is our bigger level to keep an eye on, which is about 133.80, 133. Let's just call it 133.80. That's what we've been talking about. I think if we break down below there, then a test of the 50-day moving average is quite likely, and I think it could happen here this week as well. Now, I'm not positioned very bearishly. I was trying something different here today, so I bought some calls on the VXX. The VXX, of course, is the VIX index, and I'm not a big user of the VIX, so this is kind of a new type of thing for me. But the VIX is at these lows down here. Just last week, we saw them up at 25.5, and the market seems to be kind of complacent right here with this selling today. So I figured that what I would do is take a look at the weekly options and the options that expire on Friday. I figured if we're going to get some selling in this market before Friday, then I could kind of maybe get a little bit of leverage. Based on the fear would increase, and I think these the VIX could get back up towards maybe 25.5 or so. And what I decided to do was take because I'm not really familiar with the VIX, I decided to buy some call options in it. I bought the options that expire on Friday I paid 42 cents for them. So I'm down in them right now, 44 cents actually, but what's the volume in these things? It doesn't matter. But anyways, I'm thinking that it's a low risk way. I mean, I know exactly what my risk is in terms of here's what I paid for the premium. If the market gaps up and runs, then those things are going to be worth nothing, because the VIX will should continue to drop. But anyways, we're seeing a little bit of volatility here, and I figured that's a good way to get a little bit of bearish exposure. So when we look at the 10-minute chart, we can see that here again. This is the bigger level from yesterday. We gapped higher, ran up, held underneath that prior little level of resistance and broke through it. So what it should have done, if it was going to hold, was maybe pull back to this 135.50. That was the level that I thought was pretty important for today, and then make a pattern of higher highs and higher lows. Well, that didn't happen, of course. So what you have to do is you have to honor your stops. And if you were in fresh longs from either here or near the open yesterday, it made sense to get out of them at this point. And now this market's the S&P is trying to settle in here. But again, on the daily time frame, this is possibly a lower high. We're seeing all kinds of volatility in global markets. Really, oil coming right back down to the to its lows. And that shouldn't come as a surprise, and neither should it in silver. That what we were looking at on Monday was the possibility of a rally up towards this gap in the 50-day moving average. Well, we came just short of that level, and today, of course, we came down pretty hard. And I was comparing this the other day to the URA. Not again, and the URA is the uranium ETF. But we had this big sell-off, and it's not necessarily that we had this big news type thing. Like we did in the uranium, that is, silver didn't do that. But I was trying to make the point is that, if they don't scare you out on the way down, they're typically going to wear you out. That once these markets break down, yeah, you're going to get some bounces and some volatility, but eventually the volatility is going to trickle out of these markets, and silver is going to go back to being the inferior metal that no one really pays a lot of attention to. Right now, these lows in here were close to 33. It seems like that should be a level that is tested once again. And if you take a look at the pre-market stuff, I believe that silver actually traded down. Let's take a look in here, include pre and post market, so we'll get rid of those. Silver traded as low as down towards about 32.40. So I think that's probably the more likely level that's going to be tested and perhaps undercut near 30, down towards $32 in silver. So, and then maybe you get another bounce, and then it just kind of, in my book I wrote an example about, or kind of compared when these stocks break hard like this. It's kind of like going up to the top of a fifth floor building, and you drop a ball off. Well, it drops and it bounces up to the fourth floor, and it comes back down, loses energy as it hits the earth again, and the next time it bounces, up to the third floor, the second floor, the next bounce only up to the first floor, and then it just eventually trickles out, and the energy leaves it. And that's what happens a lot of times with these markets that get hit really hard like this. There were some statistics I saw that the last 10 silver declines or the 10 worst weekly silver declines. The average, I believe, I'm just going off memory here, so it might not be correct, but a month later they were down on average about 7%, and 3 months later down 15% or something like that. Don't quote me on those numbers, but it's not generally, they don't bounce and return to their highs. That's not what's typical for these markets that get hit so hard. So anyways, we're down to that 100-day moving average again in there as well. And the moving average that makes most sense is the one where people are putting their eyes on, looking at right now. And in silver, that's the 100-day moving average. For the SPY, I think we're going to see that 50-day moving average tested here in the next, I think the next couple days. What would change my mind in there on the SPY would be a move back above 135.50. I think we're going to, you have to be playing a very strong defense unless we get back above 135.50. And I realize that's $1 away, and there's a lot of good, the potential for some good upside trade in there, prior to that. But with the declining 5-day moving average, I'm just not really that excited about the possibility of that. Of the SPY, breaking out to new highs. The Nasdaq's been largely neutral here as it tries to break to new highs. It's been basically this 58 to 50, 59.35 ish. And let's take a look at the 30-minute chart. We can see that it got up towards the top end of that range, couldn't break out, and now we're here kind of in the middle of the range. A move down to the low end here in this case for the Nasdaq, I think that you've got the possibility in there of a 50-day moving average test as well. 58 will be important, but then you've got 57.25. You've got a trend line below that. The Russell 2000 has been, as we know, the big leader, and if this is now creating, Zor pointed this out the other day, and I'd mentioned that. I think he said that on Friday. Here's the possibility of, people will be talking about a head and shoulders top in here. We've got this 50-day moving average as the neckline, and I'm not thinking the market's going to completely fall apart, but it's very reasonable to think that we could at least test the 82.5 area, which is only about $1.45 away. And looking at a 30-minute time frame, we had the same thing in here. We had that gap higher. We had it run up and then look like it was going to move higher, and it looked like it should have been, similar to one of these situations where it makes that pattern of higher highs and higher lows. What you don't want to see is what we had happen, which is this failure. So what we've got this failure over here, and and we're going to need to at least get back above 84. Let's just call it 84.50 before we can look at this as potential for some good upside in the Russell. But let me just get rid of it. Let me just put this back to exclude the pre and post market. So we're right on that 5-day moving average. So maybe it's just going to settle in and become neutral in here. But I think it's got to get back above 84.50 for it to really get moving a little bit higher, and the VIX is kind of showing a little bit of complacency here. So again, I'm not a VIX expert. In fact, I think a lot of people waste a lot of time trying to analyze the VIX, but it's a bet here based on what appears to be just larger money trends breaking down throughout the world. We've got the euro breaking down here a little bit. This is the level we were looking at on Friday, where we had the potential for support, and that we don't want to buy at. And I made the case that we don't want to buy at the 50-day moving average just because it's the 50-day moving average. Instead, we want to look to see if that market is finding support in that area. And it started to find support, but it didn't get back, to an uptrend here on the shorter term time frame. In fact, started breaking back down here a little bit more today. So we've got these bigger macro trends occurring with the commodities, with the dollar, and that's you've got to be a fool to think that it's not going to affect our equities markets as well here. And it just seems a little bit kind of complacent, I suppose. The financials are looking a little bit scarier here. I think they're making the lower highs. We've got the declining 50-day moving average, which holds as resistance. We've got we had that break, and then now we're looking at a 30-minute time frame. We're below that 5-day moving average and this prior support. That's been resistance in that area. We came down to the low end of the last couple weeks, and if we break this 1595 level in the financials, then I think you're looking at a pretty easy trade down towards at least 1580. If you take a look at the Citigroup, the 1-for-10 reverse split obviously didn't help this stock. It's broken below this kind of neutral range that it had been in. So, when you get these big cap financials, and JP Morgan looks a lot like the financials and probably a better trade, down towards 43 at least. Then it's going to weigh obviously on the the bigger the broader market. GE kind of looking vulnerable as well. But back to the financials, they are looking pretty ugly. I traded FAZ for the first time in a while today, and I forgot how much juice that thing has. It was kind of fun to trade here, but the FAZ, of course, is the triple short, and it really made this nice move in here, and I caught a little piece of that, or a decent piece of that. But anyways, if we take a look at the semiconductors, also the semiconductors have been trying to, they've been stuck at this 3680 level. We had seen last Thursday, or was that last Friday, that it did break beyond that level and then came back in. I brought up the possibility of, from a failed breakout, we have to look at the possibility of from that failed move could come a fast move lower. Well, we don't have a fast move lower yet. We had some news from Intel today increasing their dividend, and that Intel's clearly been the leader here since they reported earnings. So, are the semiconductors going to break down? It's tough to say. A test of the 20-day moving average at about 35.60 seems reasonable here. We do have this level that we had broken out past, and now it had become resistance in here again today. So 36.80 is definitely an important level. We've got a little bit of support in here, but a move back down towards the 20-day moving average seems reasonable and probably likely to me, even maybe down towards $35 in the semiconductors. So some of the stocks that we were looking at today had included, let's take a look. So the solars are, a lot of the solars, the big solars, First Solar, it's broken. STP, LDK, these are bad looking solar stocks. But we had noted MCore was one that looks looks maybe like it could get going higher. This is a low priced one that if it could take out those highs from yesterday, maybe it would get going higher. It didn't do that, of course, but I'd still keep an eye on it. And JK Solar, for some reason, was kind of strong in here today as well. They're just very difficult to trust, though, when you have such weakness in the overall sector. Another leader there is, or leading stock in the solar group, is SOLR, and this one's really, you look at the monthly chart, it's holding up really nicely here. And I would say, it looks like probably the strongest solar stock there is. VMware, they reported earnings a couple weeks ago. It's held that 20-day moving average. I bought a little bit yesterday after it held that 5-day moving average, and then it got back above the VWAP late in the day yesterday. I spit it out first thing in the morning, but the VMware really needs to clear this 94 level. I think getting back above $94 a share of VMware should be able to make it a nice move higher, but clearly just not ready yet. So keep an eye on that one. We were looking for a pullback in Mylan today, and then a bounce, but of course it didn't bounce. I did get involved in it actually in Mylan early on. Probably got in a little too early, but took a small loss in Mylan, and that appears to be it's not ready to go yet. So it's got that resistance up there. REDF, this one is looking like it's been trying to hold this 20-day moving average, and it's got the possibility of a bounce candidate in here, but probably really needs to clear above about 13 and a dime or so, and otherwise it's just these stocks just aren't looking ready to go yet. One that's kind of interesting to me as well is Soda. Soda's got earnings due, I think, in a week and a half, but this one keeps coming up to this level here, this basically about 48 area, and it keeps coming up to 48, and it's been rejected real hard from there. So I think that you've gotten probably a lot of the jumpy traders out of this stock, and it's holding support real strong. Well, we had a big move on Tuesday in shares of Soda, and we were looking for a pullback. It did pull back today, and it held pretty much at that 2-day. We were looking at the 2-day volume weighted average price. In fact, I bought it over in here and got out as it broke back down because it was holding the 2 and the 1-day volume weighted average price. It had gotten back above there, but anyways, this is one that I think it has the possibility for a big move. There's about 3 million shares short that haven't been covered according to the most recent information, which just came out too, by the way. So the short interest in there, we'll take a look at that in a moment. The other one that let me see, so Soda, we'll take a look in here. So we've got 3.3 million shares short, average daily volume of 550,000 shares. So they could be in a little bit of trouble if this stock breaks out. The other one I was going to take a look at, and the shorts continue to add to it. You can see with the newest data is this Tesla. I did get out of Tesla today, but there's 15 million shares. So they added another 500,000 shares short, and they're pretty. They've got good conviction, I'll say that, in Tesla. But it looked like Tesla wanted to break out. It had a decent day yesterday. Real choppy action, but it broke down today. I sold my calls in there. I was out of the stock yesterday, but I sold the calls as well. And now the stock, I don't know, it's back to kind of neutral again here, and this was the level that was hopefully going to provide the volume push higher at 27.80 as it broke that neckline, but what it was supposed to do was make a higher low and then be able to rally, but it came down, and this support, or this resistance rather, did not act as support. It broke down. So you gotta, in my book, you just gotta sell the stock. You gotta sell the option and move on and say maybe it sets up again. This is kind of a squirrely stock here, but anyways, it doesn't seem to be doing really well. Oil service, I was going to talk about that as well. Oil service has broken some important support in here, and we can see that it's broken that 100-day moving average as well. So the oil service, I think pretty much. I said this Monday night in a webinar to subscribers. Is anything with oil in the title is generally going to be suspicious in my book, and I think for most people here. How can you look to get long an oil stock when you have oil breaking down like this? So I know that's a simplistic way of looking at it, but I think they're just going to be under a cloud of suspicion. The other thing I was going to mention was RAX. RAX reported earnings yesterday, and the initial response, gapped lower, rallied back up, and today it gave it all back. So taking a look at the 2-day volume weighted average price in there, you can see that since the earnings came out, the average participant is engaged at about $43.10. Well, we're down at $41.30, so it can't feel too good for fresh money to be long in there. And you look at this level at about 40 and a half. I think if Rax has enjoyed this huge rally, multiple tests of the 50-day moving average. Now we've got another one here, and a pretty important support level. So be careful with RAX, I would say, at this time. Let me take a look at Twitter and see if there's anything here that you guys have put in, and then I will take a look at those. Otherwise, we'll log off. We'll become. Thank you for the retweets, Long Horizon, Alfie, Fibline, Just Steep as well, and looks like we don't have any requests here. So anyways, I would say be extra careful here the next couple days in these markets. They seem kind of vulnerable to me.